Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 5th day of March, 2015, and this is the daily report for gold and silver. We do have the precious metals markets softly lower in quiet trading today. Equities markets are higher, dollar is stronger, oil is weaker. First to gold, currently trading off about $2.5 on the day. The key though to me is it is below 1200, currently trading at 1198. That is with a low of 1196.20, a high of 1208.70. Silver also trading lower, off about 4 cents on the day. The low 16.14, the current 16.19, and that is with a high of 16.34. So a quiet range. More on silver in a little bit, but before we get into the meat of the show, I do want to make an announcement. We will be having a live webinar. Of course, there's no charge. If you go to our website, goldforecast.com, you'll see this image on the front page. We'll also include a link on the actual mail out that we send. That is a week from yesterday, so it's Wednesday, 4:30 Eastern time, live webinar. It will be in lieu of a regular show. We will, of course, tape it so that all that cannot make it to the live presentation can view it later, but it is time for a webinar. So we'll see you next week. Go ahead and sign up for that. So traders, I am real excited about next week's webinar. It will give all of my subscribers a chance to interface, ask questions, and have an extended look at the technical models that we're currently looking at. Now, what are we looking at right now? Well, we've got the market undoubtedly back under pressure, back at this area, 1198. That's a 61%, 76. We've said it time and time again. We've again got this small-bodied candle. In other words, the market has opened and closed at roughly the same time. We no doubt have real resistance between, call it 1221 and 1219. That represents this area here. We can also see it when we look at the most recent highs up in this area. We absolutely, though, do have some support at 1200. We have not been able to really break hard. The only instance that we did that was when the market touched at 1191. So what we're seeing is truly a congestion right now and a very, very range-bound market that at least up till now, over the last, call it 2 weeks, has not had the ability to either break above 1221 or really break below and close below, call it 1198. Now, absolutely, we got lows in the market well below that, but take a look at what we call the real bodies. And the real bodies, of course, this is a daily chart, but the real bodies are the boxes or these rectangles which represent where it opened and where it closed, and therefore it is the most important area of the marketplace itself. The highs and the lows are absolutely important, but we pay a lot of attention to the fact that when the market did dip below this point right here at 1198, it never sustained a close below 1198. You can see all of the real bodies are still in this area. So we have defined support at 1200. We have defined resistance at 1220. We've got a $20 congestion area right now that we're attempting to determine if it will break to the upside or to the downside. My sense, obviously, is that we're going to, this little clip up, and we'll break lower in terms of the marketplace itself. However, any kind of fundamental news that changes the outlook would, of course, change our current outlook on the market. But all things being equal right now, I do believe we'll see gold continue under pressure. So traders, no doubt, as I said, I believe we'll see continued downside pressure in the precious metals market, specifically gold and silver. We're looking at the Standard & Poor's E-mini, and this E-mini, of course, is a weekly chart. We're once again flirting with that 2100. That's on this chart. Let's go ahead and look at a much more short-term chart. And to do that, I've gone ahead and pulled up our half-a-day chart. Gives us a little bit more to work with. And the one thing that we talked about that we're absolutely, I believe, witnessing again, we've got this rounded top here, this rounded top here. We are now again having a rounded top. Now, does that mean that this is prior to some sort of a small correction to the downside? Because we have seen that occur in the last couple of rounded tops. Or are we going to simply consolidate and then move to higher ground? We'll have to see how this really pans out. But the last couple of rounded tops that we've seen have resulted in corrections in the market, and fairly sizable ones. Now, we've got real support in the market, 1885. That's really long term. We can see where it broke above certain areas, this being 2000 here. We're now at that 2100 point, and we flirted 2110's been our high. We're back or just at roughly 2100 on the Standard & Poor's. Dow Jones did close higher on the day today, and it did close above 18,000. NASDAQ closed just below that $5,000 mark. So traders, this is the big news. It's a continuation of what we've been seeing. Look at this weekly chart. Look at the move that it's made. And really importantly, look at the fact that it is now trading above this particular level at 96.25, 50% retracement, 11-year high. Not since 2003 have we seen the market trade above 96. When we look at this weekly chart, you can see this dramatic rise. I'm going to go ahead and compress it. Let's put some more data points in. And when we go ahead and compress the chart, you can really see how dynamic this most recent move is in the dollar index. As I said, moving above 96, we have this big gap right in here where we've just gone and filled that gap. And if you compress it a little bit more, this is the end of my data series, only goes back to 97, but you can see that when we look at this in relationship to where it's been really over the last 25 years, then what we look at is a dramatic rise up to 121, and that's where this 50% comes in, because what we are calculating is really from this top here to this bottom here, and this puts us dead at a 50% retracement, and we are trading just above that point. As I said, it's an 11-year high. It's a dramatic move. In terms of real resistance in the market, we've got to then look at this particular price point, and it looks as though that puts the dollar index another 4 points from here, roughly at 100. And the easiest way for me to do that is going to go ahead and put out our crosshair so we can see where we're at. This is our 50% retracement point. This next level here is at, call it 99.25. So call it three large basis points from here. And that's our next real level of technical resistance in the dollar. So traders, lastly, in terms of outside markets that we do look at, as we attempt to analyze the gold market, monthly chart crude oil, the month is still up. Today, crude did trade lower. In terms of our weekly chart, we are still trading slightly higher on the week, and then we are trading lower on the day. But you can just see how it's been hovering right around a little bit above to a little bit below 50. I really think we've got to compress this to get a real solid indication of what we're looking at in oil and whether or not we're seeing some sort of a potential bottom. The key is on this particular market, on a technical basis, we've really only seen this kind of dramatic fall once, and once we went into months that had higher closes compared to the open, and we've had one, although very, very slight. If we get a sizable recovery in the market, ends up at the end of the month closing at around 55, we are looking at, on a technical basis, at a similar bottom kind of a scenario here. And when you consider that in 09, this dramatic drop from well over 140 down to just about 30, so $110 drop, and then it comes back to about 110. it did manage to regain much of the losses here. It then traded fairly sideways for a period of years, 2011, 2012, 2013. During that period of time, we had, in terms of extreme highs, roughly at around 110 and extreme lows at roughly 80. So we had about a $30 range until it really fell out of bed and broke back to the downside, to be reminiscent of what we saw in 2008 and 2009. So traders, to just kind of summarize what my current strategy is and what I'm looking for, I absolutely think that the pressure's to the downside. We've seen failure after failure of the market attempting to recoup, only to stall at really strong Fibonacci retracement points. I would feel comfortable if the market came back up, traded in this area to initiate a short position, putting our stops right above this particular point, because if it breaks above this point on a closing basis, it tells you the market's moving higher. The other basic trigger that I would look for is a clear break below this current support level at 1200. Now, we've gotten fake outs. We've gotten points in which it went to 91. Never closed below 1200. Again, we're just hovering at this point. So on a closing basis, I really need to see the market again kind of flirt with this area down here, 90, 91, 89. I will sell a breakdown in the market. I will also recommend selling a failure on any kind of rally roughly at 1215 to 1220. But as long as it's right in this range with not breaking lower or not moving in any kind of rally mode and stalling, I am simply in a holding pattern right now in both gold and silver. We really went over support and resistance levels of silver yesterday, and really what you want to watch for those that trade silver is watch what gold does, because gold is going to lead, I believe, and silver is going to follow. If we see that break, I believe we'll see that break also in silver. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.